Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in roughly 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going, bro?
I'm very good, Bryce. How are you?
Mate, I am pretty ecstatic. Last night was a good win for the Bombers.
Yeah.
It was a roller coaster of a game, but we came out victorious at the end. Melbourne now 0-3 to start the season, and I'm glad it's not Essendon that are 0-3. We're now 1-2, so things are looking up for the Bombers.
Yeah, there you go. Now, I wish I could say I watched the game because it sounded like a cracker, but I was actually at work and then just passed out, so...
Not the ideal Friday night for you.
I don't know if I'm tragic enough to go back and watch the replay, but I'll definitely watch the highlights. From what it sounded like, they were really coming at you guys, and you managed to hold on. So you got to be happy with that.
Very happy. Well, they ended up taking a lead into half-time of 7 points after being about 30 points down, and I was thinking, oh god, classic Essendon. And then we came out and kicked eight unanswered in the third quarter that sort of laid the foundations for the 18-point win at the end. So very happy. But that's not why we're here. We're not here to talk AFL as much as we could.
No, we're not here to talk Bombers. We're here to talk the biggest game of the round, Sydney Carlton 145.
Hate to break it to you, bro. I've actually tipped Carlton for this one.
Yeah, well, you can be wrong. That's all right. That's okay.
No, it should be a good game. All the best to the Swans.
Yeah, well, speaking of you being wrong, this is our Monday wrap episode of the week that was in our trading competition. Only 2 weeks to go now until we send someone to New York to visit the New York Stock Exchange and to bask in the glory of being Australia's next top trader. But to tie it back to you being wrong, let's start with an update on where each of us sit in the rankings.
Firstly, I want to address this little segue phase you've got at the moment.
Yeah. Well, yeah,
it's good, actually. I want to address it in a positive way.
Oh, okay. That's new.
But I'm not sure that I agree with the segue that you're going into about me being wrong. So, okay, good idea. Let's update everyone in our portfolios. As you said, 2 weeks to go. So, I'll go first. How about that? Start with the good, end with the bad. So we'll end with you.
Well, are we just going to talk about the rankings to frame it a little bit, or are you trying to avoid that?
No, I'll talk about the rankings. Don't worry. I want to talk about my portfolio first to get the good news out of the way. Right. So no change to my portfolio. As I said last week, I was going to let mine roll because I was pretty confident that the market is in a bit of a bullish trend at the moment, and my stocks both favour those conditions. So my Ultra Pro QQQ ETF, the NASDAQ, it's now up a total of 13.24%, and my ProShares Ultra Pro Russell 2000 is up a total of 5.21%. Unfortunately, though, Ren, those gains have been offset by some losses I made on IIPR Industrial Properties, which was a much larger trade, and those have been offset. So unfortunately, when we look at the leaderboard, I have remained relatively stable in terms of my position. I'm now 375th, down 1%. So good lesson there. Last time we spoke, Ren, last weekend, we were neck and neck. I think I was in front by...
You were in front, yeah.
By 3 positions or something. So how about you tell us how your portfolio is going?
So in a testament to laziness, I haven't done anything this week.
No, you're busy, not lazy.
Well, laziness in terms of trading, busy in terms of my other job, but it has worked out for me. So I am 130th, up 1.53%. For my portfolio, I still haven't been stopped out of Dell. It actually rose about 3% this week. So I'm writing that. And then some of the other stocks that I just have in my stake account, which I've just left there, are sort of just doing their thing. So not up huge, but beating you, which, as I keep saying every week, is all I'm in it for.
Well, not only beating me, but you gained almost 200 positions on last week, so pretty good movement.
Yeah, well, I think a lot of people may have fallen rather than me gaining, but
Hey, don't say
it
that.
all nets out the same. So look, pretty not much of an update from me, but I do have a trade that I've put on, which I'll tell you about, just so you're aware of it going into the week.
Love it.
I'm going big. Go big or go home. This is the week where I make my move and solidify my place over you.
Okay.
I've put my money in a 3 times leveraged inverse US financial sector ETF. So
Inverse?
I'm betting. There's a couple of US banks scheduled to report next week, and I'm betting that we see some disappointing earnings results from some of the US financial sector, and that my 3 times leveraged inverse financials ETF takes me home.
So this is a boom or bust move from you, Ren, because if it goes the other way, so is your position on the leaderboard.
to quote our friend Alf, it's a bit of a YOLO trade. I just thought, why not add a bit of excitement to it all? There's no trip on to New York on the line for us, so what is there to lose aside from my money?
Yeah, exactly. There's a lot of pride on the line between us, I think. So, okay, well now I guess it's up to me to come up with some sort of YOLO trade as well. So give me some time, and next time we chat, I'll update you on what I've done, because like you, I have not given it much thought over the last 7 days or so, which is probably not the best message that we're giving everyone out there, but whatever. So
yeah, well, I think if we've made it very clear that trading week to week isn't our forte, although you've probably a little bit more interested than I am. So the fact that we're not giving our personal trades as much attention as other competitors doesn't mean that we're not giving this podcast as much thoughts. It's just where we spend our time.
yeah, absolutely.
So let's talk about what happened in the market this week. So for people who are paying more attention, they could actually get something of substance out of this episode. So last week we said that the US market had its best quarter in a while. Q1 2019 was good. That trend really continued this week, and the S&P 500, the Dow, and the NASDAQ all hit 6-month highs, and the MSCI All Country World Index, so basically the global stock market, also hit a 6-month high. So they've really come back from the weak end of 2018. And if you bought the dip then, you would be pretty happy. But let's just quickly round off this week in terms of the major US indexes. So pretty good week all round. The NASDAQ was up 2.7%. The S&P 500 was up 2.1%, and the Dow Jones Industrial Average was up 1.9%. The S&P 500 is now only 1.3% off its record closing high, so it's almost back to hitting all-time highs. So, as we said before, you'd be pretty happy if you bought the dip, and it's about to break into a bit of blue sky. So, things looking all right in the US stock market. Before we get into specific companies that may have done well or poorly over the week, might be worth touching on some of the big macro things that we're seeing, because there has been a lot, and I think it adds a bit of colour to what's going on in the market itself.
Absolutely.
So your favourite one to start things off, oil continues its good run.
How good.
Yeah.
Yeah. As we said last week, Ren, it also has had the best quarter since 2009, I think it was. So all guns blazing for oil. What's your macro trend that you're seeing, or is that it?
Well, that's really it. It's on the back of tightening supplies still. So that's an interesting one for people looking at, especially if you're trading in this competition, if you're looking at the US shale sector, the bull oil price, like the rising oil price, is always good for the US shale sector because just the economics of the industry. We won't go too deep into this because I'm conscious we're trying to not do our hour-long episodes, but the the unit economics of shale oil mean that as the price falls, it's generally the first to be turned off. So I think if you're looking at US shale oil players, you'll be happy to see the price continue to rise. The UK pound weakened as Brexit continues to just be an absolute
debacle.
Yeah, there you go. I was trying to think of a way to not swear there, but really, if it was swearing was warranted, I feel. The pound is weak. So if you've got an American company that sells a lot in Britain and gets paid in pounds, then potentially not doing as well as they would have been doing, a year or two ago. US and China continue to make positive sounds around a trade deal, so that's positive for the world, I guess.
Yeah, that's a big one.
Yeah, 196,000 jobs added in March in the US, and the unemployment rate is at a 49-year low.
Wow.
So, and the last big piece of macro news, it always comes back to Donald Trump, I think. He was out there telling the Fed to cut interest rates and stop shrinking its balance sheet. So it's unusual for a president to do that, but he obviously wants the Fed to continue to stimulate the economy.
Yeah, I don't know how to take this because it's very rare for a president to interfere with the policy of the Fed. And so, it's probably a political move for him because, he loves to harp on about the fact that the share market is going so well is because he's the president and all these sorts of things. And I can imagine if the share market starts to take a different turn based on, the economics of the Fed selling off their balance sheet, then it's not going to look so good for him. So probably more of a political move than a move from an economic standpoint. But so far, the Fed seem to be listening to him in some regard. Yeah.
Well, look, some people are saying that the sell-off at the end of last year was due to the Fed being too aggressive with raising interest rates. So if he is pinning his success on the stock market number, then he definitely won't want to see interest rates go up anytime soon.
No.
But yeah, so a lot of things happening in the global economy. There are a lot of macro factors affecting stocks, but you could invest in ETFs to be exposed to those macro factors, but most of our competitors are investing in stocks specifically. So let's get on to some that had a good week and some that didn't. Okay,
well, let's start with Lyft Ren. This time last week, Lyft had IPO'd. You were a bit disappointed that you didn't get into the IPO.
Yep.
And that was going to be your game changer.
Should I be disappointed?
You should not be disappointed. If you had got in, you would have got in and it would have jumped 9% on its IPO when it hit the markets. Opened well above the $72. However, over the subsequent sort of 3 days, took a drastic turn, down as much as 11% on the second day of trade. And then, I guess, as people were taking profits and whatnot from those who'd probably been invested prior to the IPO, if you'd let it sizzle and stayed with it for the week, though, you would have finished down 0.5% from its opening price, not from its listing price. So if you had got in at its listing price, then you would actually be up. But from its opening price, you're down 0.5%. So not massive, but definitely not the game-changing move that you thought it would have been. So that's Lyft over the last sort of week.
Yeah, there you go.
There you go. So I've got another one, Ren, one that we've spoken about before, and that's Tesla.
Yeah, okay, nice one.
Classic Tesla.
That was on my list, so I'm glad we're, in the same headspace.
So didn't have a great week. As we know, Tesla have been plagued with production issues for years now. Constant battle between themselves and analysts and investors. And Musk does all he can to try and meet, or at least appear to be meeting, the production schedules that he says he is, making big tents and whatnot out the back of the factory.
Yeah.
So the stock price was pretty flat for most of the week, and then on Thursday took a massive plunge down almost about 10%, has recovered sort of since then, but has ended the week down 2%. The reason for this massive plunge, though, and it was a significant one, is Classic, as I said, closed down 8.2% because they warned on profits falling due to a 31% drop in the number of vehicles that they're going to be delivering over the first quarter. So Classic, it's a production issue. They blamed problems with shipments to Europe and China, where it has begun selling its Model 3 car for the very first time. So these forecasts were well below what many analysts had predicted, and that was after analysts had even given them a bit of a cut in what they were expecting. So Tesla obviously came out and said that they expect their quarterly profits to be negatively impacted. And as such, investors punished them. So not a good week for Tesla.
Yeah, not a good week at all. One more that I had that didn't have a great week was Walgreens, which is a big retailer in the US. And it was down 14% in the week, down 20% year to date. But for those outside the competition interested in more long-term trends, it may be the latest in a long line of physical retailers that really are starting to struggle. Its sales figures were all right, but its earnings, its profit was down. And that's why it fell so much this week. But you know, the numbers of physical retailers, big established companies that are starting to collapse, you know, they call it the Amazon effect. It's probably also partly the Walmart and Target effect as these big box stores eat their lunch. But just another one, I can't remember what the number is, but it's a stupid number of bankruptcies for big American retailers over the last few years. In Australia, we feel the aftershocks of it, you know, Toys R Us, stuff like that. But one to watch long term outside the competition as well. Walgreens, potentially another retailer starting to struggle.
Short Walgreens, maybe.
Maybe. Well, you may have missed the big move down, but
yeah. Okay, I've got two quick ones. One we haven't spoken about. Maybe you did a few months ago. I'm not sure. Harley Davidson, the motorbike company.
Yeah.
It's had its best week since 2016. It was up 11.5%. So if anyone in the competition is in Harley Davidson, they'd be absolutely cheering. The reason being that they predicted or have come out and warned the market that their sales are going to be better than expected. So as we'll know, that generally leads to an increase in the share price. But they've actually been rather bullish over the last couple of weeks. But this was particularly a good week for Harley Davidson. And one company that is benefiting somewhat from the troubles that Boeing is having from a lot of their 737 fleet being grounded is Delta. So Delta are on a 9-day winning streak, which is the longest they've had since 2008. They were up 17% in the last week, primarily because they offered an upbeat outlook and they renewed a partnership with Amex, which delivered them $3.4 billion in revenue last year. And as I said, they're benefiting from Boeing's difficulties with their dodgy aircraft and half of their fleet around the world sitting on tarmacs. So Delta having a good couple of weeks.
Yeah, there you go. All right, two quick winners from me, and then let's wrap this because we've gone over 20 minutes, I'm pretty sure.
Sure.
First one, Wynn Resorts, which is a big casino operator. They were up, their share price was up 18% for the week, mainly based on a great season in Macau. So Macau is the sort of Asian gaming capital, an island off China.
Vegas of Asia.
Yeah. And Wynn Resorts, which run casinos in both Vegas and Macau, are doing well out of Macau at the moment. And then last but not least, probably worth giving everyone an update on Amazon. It was up over about 2% for the week, so not massive, but there was a question around the divorce settlement with Jeff Bezos and how much of the company he was going to be able to own when all was said and done. He's going to own 75% of his company, and Mackenzie, his now or soon to be ex-wife, is giving him voting rights over all of her shares. So no questions there about who will be running that company going forward.
Yeah. So she has 4% of the company after the divorce settlement, and that's allowing her to walk away with $36 billion.
Yeah, so it's not bad. It's not bad.
Crazy. Yeah. Anyway, Ren, I think one thing I just want to quickly address in maybe 2 or 3 sentences will to keep it short, but a lot of people ask, where do we find all this sort of information and whatnot on these stocks and these updates? So where did you look today or whenever you did the research for this sort of information?
Honestly, it's just a bit of Googling. You can find sort of market, like daily market wraps, weekly market wraps, monthly market wraps, and that can sort of get you looking. You can also, if you know that certain things are happening, you can just Google them directly. It's all out there. It's just about starting to read and sort of going down rabbit holes from there.
Yeah, absolutely.
But nothing, nothing behind paywalls, no super secret website where we get all this information. It's all freely available with Google.
Yeah, I can't really add much more to that. So a good one for me is Bloomberg. And as you said, the market wraps are a great place to start, and that you can then go on from there. Nice one, Ren. Well, 2 weeks to go. We will be announcing the winner at the end of, on the 20th, the competition closes. We'll announce the winner very soon after that. We'll be shutting the leaderboard down at the end, towards the end of the competition, so that we can do some checks for everyone in the top 10, 20 to make sure everyone is university students. Also, just letting everyone know, if you haven't heard already, we are throwing a meetup celebration of our 100th plus episodes and celebration of the winner of Australia's Next Top Trader on the 4th of May in Sydney, kicking off at about 4 p.m. Venue is just about locked in, so we'll update everyone with information on that as it comes through. Apologies to all of our Melbourne listeners. I know a lot of you have been saying that you would love us to come down, so we will endeavour to do so at some point in the life of Equity Mate.
It's really just, I have a lot more passion for this, and I'm willing to come to Sydney. Bryce, on the other hand, can't get out of his Sydney bubble. Refuses to come anywhere else,
Mate, the HQ address for Equity Mates is a Sydney postcode.
Yeah, but that's because you insisted on it.
Oh, come on.
So Melbourne listeners, I hear you. I'll keep pushing to get Bryce out of his bubble and get him down here.
I'll be down in June, so maybe we can do something then.
And other states as well,
True. It's not just...
And overseas. Potentially we do a world tour at some point.
Yeah, well, I was looking at some of the stats for Thought Starters, Ren, and Singapore ranks incredibly high in terms of readership for Thought Starters.
There you go.
Maybe we're off to Singapore next.
Not bad. All right, well, if you want us to come to your city or town, you need to make the case to Bryce. So get on to him and start harassing him.
Yeah, nice. That's a good idea. All right, Ren, we'll leave it there unless you've got anything pressing to add. Otherwise, let's chat next week.
Sounds good.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.